Danny, I mean, I'm older than you. I don't remember any times it didn't have geopolitical risky
Yeah.
times. Uh, if you know such a period, oh, please tell us. I can remember people say to me things like, "Oh my gosh, it used to be so easy." No, it was never. It was never easy for me anyway.
Interesting. Yeah.
It was always difficult and complicated, and it has always been the potential for something to go wrong. It was either going wrong or potentially going wrong. That is the case now. Politicians all over the world do strange things, and we will continue to see politicians do strange things.
Hello and welcome back to Capital Cosm. Today I have a very, 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 very special guest on the show. It is the legendary Jim Rogers, a man who needs no introduction, but I'll ask him to give one of himself regardless. Jim, thank you for coming on the show, my friend. I really appreciate it. I'm sure the audience appreciates it as well. You got a Rolodex of wisdom that I'm sure you can impart, especially some of the younger people that watch this show. So, Jim, for those who may not know who you are, kind of give us an intro on who you are.
Well, Danny, I'm delighted to be on Capital Cosm with Danny. I don't know, I'm a simple person who tries tries to make a living investing. Sometimes I get it right, make many mistakes, but occasionally I get it right. And now back to young people, I will say to the young people, please get some experience and please focus on what you already know. Don't listen to hot tips. Hot tips will ruin you.
So what do you mean by hot tips? What exactly is that?
Well, we're all going to be down at the bar on Saturday. And I promise you, at least 10 people are going to come over and say, Danny, let me tell you about this company. Let me tell you about this stock. It is going to go through the roof. It is the best thing since sliced bread. You should buy this stock. And if you don't listen to him, don't worry. Someone else will come over and give you a hot tip
Isn't that
and
the great?
ignore them.
Yeah,
Please ignore them.
yeah. Isn't that the greater fools theory, where you start hearing stock tips from, let's say, like your cab driver or your restaurant waitress, and etc. Isn't that a sign that you're approaching a top in a given market?
Well, see, you have experience and you have learned some of the basic lessons about investing. Yes, it is not a good sign. It is not a good sign when you go to the dentist and the receptionist wants to talk to you about stocks.
100%, 100%. So, what's kind of been your investment philosophy over the years? How did I know you stay away from hot tips and so forth, but how do you kind of approach? How do you identify opportunity out there?
Well, first of all, I hasten to tell you I do make mistakes, but what I have learned is if I can find something that's depressed and therefore probably cheap, where there's a major positive change taking place, I might make some money. So cheap and change.
Cheap and change. I've heard you say, all you, it's it's essentially a waiting game. You're waiting for you're waiting to see if there's money left on the ground, and when there is, you just walk over there and pick it up, and for lack of a better term, right?
Well, that's what I try to do. There's nothing like finding, oh, look over there. Look at that money. Let me go get it. That doesn't happen very often, Danny, but if you can find it and it's that obvious and that simple, you'll probably be successful.
But isn't it kind of counterintuitive as well? Because typically, what you should be buying is what your inclinations tell you not to. So you you kind of have to go against your gut, or not your gut, but just your adrenals. So when you're feeling intense fear, that's probably something that has pretty good value or upside. Not everything, right? Some things, don't catch a falling knife and so forth. But the things you feel really excited about, feel intense euphoria about, those are probably the things that you might want to stay away from, right?
Well, now you're getting into the emotions of human beings, and we're all human beings, and we all have emotions, which can be a negative. Emotions usually do not help when you're trying to make investment decisions. Being cold-blooded and heartless can be useful if you are going to be a successful investor. Don't get excited when everybody's excited, and please, if everybody's depressed, you should get excited.
Right. So we're closing out 2023. Um, we're getting all these mixed signals from the Fed and so forth. One day they tell you they're going to stop hiking rates. Another day they tell you they might start cutting rates. Another day they tell you they're not going to cut rates. So we don't really understand. The Fed's lying in one way or another. And whether or not there's a hard landing, soft landing, how are you kind of seeing 2024 play out? Are you anticipating something along the lines of a recession? Are we going to see a return of commodity based inflation, et cetera? What do you think?
But Danny, you learned one of the first and important lessons about investing. The Fed doesn't know what they're doing. Most central bankers don't have a clue. Remember, Danny, these are bureaucrats and academics who want a government job. I mean, how many people do you know that want a government job? Well, most people want a real job. They don't want to work for the government. But these guys, because they can't get a real job, want to work for the government. And you really know what they're doing. You look back over American central bank history. We've had 3 central banks in our history. This is the third. This one's been around 100 years or so, 110 years. There have been very few who've known what they were doing. I can think of 2 before. So most of these guys don't know what they were doing. If you want to be successful, you have to figure out the reality of what's going on in the world. You have to listen to these guys because they do have influence and power, but you have to figure out yourself what the reality is and then make decisions. And hopefully you'll get it right occasionally.
Yeah. So they may not know what they're doing, but their actions obviously do have influence in the rest of the world.
I said they have influence and power. They can make things happen.
Yeah. And, along the line of these Fed chairmen, et cetera, they're, like you said, they're just purely academics, except I think with the sole exception of Powell, right? He used to be in private equity, but Bernanke, Yellen, Greenspan, these are all academics. And I think the reason why, that's not necessarily an advantage is because academics are in sort of a bubble themselves. They're isolated from the real world, so they don't have any real skin in the game, so to speak. Their ideas aren't really tested against the economy as, say, someone in the private sector would be. If I'm like an engineer and I build a bridge and the bridge collapses, then I'm a bad engineer, right? But these economists, they come up with all these theories and everything, and they never take accountability for it because they can kind of rationalize it away with, oh, it's because of this other thing here and we never expected it and so forth.
If you're at the central bank and the bridge collapses, you'll blame it on Wall Street. It's not your fault. It's Wall Street. Don't ever take the blame, Danny. That's one of the first lessons for central bankers.
Yeah. Yeah. So cool. So 2024, watch the Fed, not because they're telling you what they think will happen, but you have to understand what they plan to do that will have downstream effects. Do you think that we're in line for say a hard landing or recession in 2024, or are we heading more towards a crack up boom, as von Mises put it, when it comes to the stock market before we kind of taper down?
Well, throughout history, throughout American history, the year before election is usually a good year in the investment markets because the politicians all know the election is next year. And they
Right.
try to make everybody happy to get ready for the election. That happened again in 2023. Now we have to worry about 2024. The situation now, Danny, is that we've had the longest period of American history without a serious economic problem since 2009. So that's 14 years. Maybe it's going to go 40 years. I don't know. Never has. So I would suspect we're getting closer to the end. I see some signs that always happen towards the end. You see fewer and fewer stocks going up. You see some stocks go up every day. You see a lot of new people coming into the market. You see a lot of new people who say, oh, this is easy. This is an easy way to make money. I mean, all this has happened before. Hard landing, soft landing, I don't know. I don't think we've ever, there have been very, very few soft landings in history, if any. So I doubt if we'll have a soft landing. We never have. And when we have a hard landing, it's probably going to be the worst in my lifetime, Danny, because you remember 2008? 2008 was a problem because of too much debt. Danny, look out the window. Since 2009, the debt everywhere has
Yeah.
skyrocketed.
33 trillion.
Even China has a lot of debt now. China didn't have any debt 25 years ago, but even China now has a lot of debt. So has to be a bad problem next time.
So I was actually looking at this with one of my guests before, Simon Michaud. I don't know if you're aware of who he is. Simon Michaud, but he's a geologist. He does research in minerals, etc. And it's much harder today to extract things like oil, resources, everything, than it was in the 80s when the likes of Volcker was able to raise rates all the way up to 15%. And the reason why that's important is because, Volcker was able to raise rates that high because he could effectively, the economy could effectively grow its way out of it. Energy was cheap, materials were cheap and abundant, and those are closely tied with productivity. Nowadays, all this stuff is much harder to get. The return on investment when it comes to excavating stuff is a lot thinner than it was in the 80s. So Powell doesn't have the same luxury to raise rates at the same heights that Volcker did. And so, it doesn't seem like, to me, it just seems like the debt burden, when it comes to it, it was only a matter of time that they had to stop these rate hikes, just because you're dealing with a $33 trillion debt as opposed to whatever it was in the 80s. It's much smaller. And then you also can't grow yourself out of it. Right. And it's not just the US, but it's also everywhere else. You mentioned China, et cetera. So, what does this mean for the monetary system? Are we going to have a brand new monetary system, or what? Like, how do you think this plays out?
Well, as I said before, next time we have an economic problem in the US, it's going to be the worst in my lifetime. You just outlined a lot of the reasons. See, people should watch your show to find out, why. Because we do have lots of serious and very deep problems in the US now. So I don't see how we can avoid having a very serious problem next time we have a problem. For the reasons you mentioned, and I'm sure others we haven't thought of. You should be worried. Everybody should be worried.
Yeah.
If they're worried, they'll become knowledgeable, and then they will probably be okay.
Yeah. Yeah. I mean, you can kind of see it playing out in the price of gold, right? Gold hit an all-time high a couple of weeks ago, hit 2150. And I remember in 2020, gold rose through the ranks. It was just ripping through not new all-time, but it just ripped through to almost 2200. And gold is kind of like a leading indicator of inflation. So by the time the gold price rose, a year later, inflation started coming up in the CPI. So are we about to see the gold price begin to rise again precipitating another round of inflation, do you think?
Well, markets are usually smarter than I am. It's usually smarter than all of us,
Mm-hmm.
for that matter. So what you just pointed out is a good indicator that people can watch and should watch to see if it got the answer. I own gold, and I have never sold any gold. Been buying gold for many years. If I were buying something today, I would buy silver. Silver's down 60% from its all-time high. As you point out, gold is at its all-time high. So I'm not buying either today, but if I were buying either, I would prefer silver as a way to hopefully protect myself.
What are you bullish on today?
Well, not very much. The Chinese market is somewhat depressed. The Japanese market is in an uptrend. It's probably going to go back to its all-time high. I sold my Japanese shares, but it doesn't mean it's not going to go higher. Uzbekistan, I've been buying a few shares. There are not many markets that are depressed that I can see in the world. Agriculture is depressed, but that's about all. I mean, interest rates are certainly not depressed by any stretch of the imagination. Stocks around most countries are making all-time highs. Property in many places is a bubble or collapsing. So I don't see many opportunities except in maybe some commodities. Silver's down 60%. That's not a bubble, something that's down 60%. I'm not buying silver, but commodities are perhaps cheap compared to most assets.
Got it. Got it. So if I can kind of read between the lines, are you sort of like waiting for downswing in prices to
Well,
deploy more capital, or is that...
I am not selling short stocks anywhere because often, the stock market has been going up the longest in American history. Often towards the end of a long rise, there's a blow-off phase where just everything skyrockets. So I am waiting. If there's a blow-off phase, I hope I'm smart enough to sell it short. But at the moment, I'm just sitting here watching for the most part.
Mm-hmm. Got it. You have all these things popping up all over the world. You've got the war in Ukraine. You've got the conflict over in Israel and Gaza. You could potentially have something spark up any day now in the South China Sea or in the Korean Peninsula. How do you navigate, capital during geopolitical risky times like this?
Well, Danny, I mean, I'm older than you. I don't remember any times it didn't have geopolitical risky times. If you know such a period, oh, please tell us. I can remember people say to me things like, "Oh my gosh, it used to be so easy." No, it was never easy for me anyway.
Interesting, yeah.
It was always difficult and complicated, and it has always been the potential for something to go wrong. It was either going wrong or potentially going wrong. That is the case now. Politicians all over the world do strange things, and we will continue to see politicians do strange things. I mean, the Japanese central bank is printing huge amounts of money and buying shares. So Japan's market is going up, and for other reasons too. If you ask me, there's no reason for the Japanese central bank to be buying shares. That's why I don't work for the Japanese central bank. They wouldn't hire me in a minute because I think they're making foolish mistakes. But that will probably lead to the all-time highs for the Japanese market.
Got it. Yeah. Yeah, I've actually been tracking the DXJ. It's I think the ETF itself, the Japanese ETF, the DXJ has actually made an all-time high recently. But it only goes back a decade or so it doesn't have that long history to piggyback off of, the 70s and 80s.
The Japanese stock market made its all-time high in 1989. You weren't born then. That's why you don't remember. But I do remember.
I was a year old. Yeah. Yeah. So I mean, I don't remember it, but what are some of the most valuable lessons that you've picked up over the years that you want to impart to the audience?
Well, everybody should learn to only invest in what you yourself know a lot about. Don't listen to other people. Don't listen to hot tips. I mean, everybody watching this, Danny, knows a lot about something: fashion, sports, cars, something. And that's where you should focus. If I told you you only had 25 investments in your lifetime, you would be careful. You wouldn't jump in and out. Every time you heard a hot story, you wouldn't invest. You would be very careful and you would be successful. I know everybody thinks this is easy. It's never been easy for me. So please focus, concentrate, be disciplined, and wait until you find a good opportunity yourself.
Yeah. Yeah. So focus on what you know most. Really hone in on that.
People will say, "Oh, that's boring." Be boring, Danny.
Mhm.
If you want to be a successful investor, be boring.
Yeah, I mean, there's actually a study done on this where they actually compared like multiple portfolios from like hedge funds and like using different strategies, and each one was beat by just like holding something for 50 years straight out. And it's kind of like,
Everybody has to find their own way. You once knew a guy who was a brilliant short-term trader. He only traded about 50 stocks. He didn't know most of the hot names, new names, but he knew every tick in General Motors. He
mhm.
knew every tick in some of the big companies, US Steel, things like that. But he didn't even know much about US Steel, but he knew every tick in the stock and he was brilliant at it.
Yeah. And when you know something to that depth, you're able to allocate more capital to it. The reason why people diversify, so they have like a 1% allocation here, another 1% allocation there, that's just a hedge against the uncertainty, the mystery of what you're investing in. But if you actually have the conviction through putting in the work, then you might be able to allocate more capital in one or two or three or just a small handful of assets, right?
But diversification is not going to make you rich. Diversification is something that brokers came up with to protect themselves, so they won't sue you. And if they sue you, they won't win because you're diversified. If you want to get rich, you focus. You put all of your eggs in one basket. You better be sure it's the right basket, and you better watch that basket very, very closely. But that's how you get rich. Henry Ford didn't diversify. Thomas Watson didn't diversify. These guys put all their eggs in the right basket and got very rich.
By
You
basket,
don't hear about all the guys who put their eggs
yeah.
in the wrong basket, but that's why it's not easy.
Yeah. So by basket, do you mean like one stock or like a sector or what?
Both. I mean, either or. Henry Ford put all his eggs in the Ford Motor Company basket.
Mhm.
Got very rich. His wife, by the way, preferred electric cars. Henry Ford was doing gasoline cars. So everybody has to do it their own way.
Is there like
I wish I were rich as Henry Ford, but I'm not, but I'm hopefully can still pay my bills.
Is there like a success story that you could share with us from your personal experience?
Well, I learn more from my mistakes than I do from my experience, my successes. The problem with success is you think you know what you're doing, you think you're smart, you get cocky, you get arrogant. So I learn more from my mistakes than I do from my successes. I wish it were easy. We all see the guy on the front page of the newspaper and say, "Oh my gosh, I could do that. I could buy Apple." Well, if it was so easy, we all would have bought Apple and we would all be as rich as Apple. So it's not easy. I wish it were. But only success is to stay with my success has been to stay with what I know. when I tried to do what somebody else was telling me to do, I usually made a mistake.
Yeah. Yeah. It's like the pessimist always sees failure in success, what could go wrong, what can go wrong, but the optimist sees what he can learn from his mistakes. And
Well, I've certainly made a lot of mistakes, and I've learned. You want to hear about my first wife? Oh my
go
God,
on.
what a mistake that what a
Floor is
horrible
yours.
mistake that was.
Well, hey Jim, what have you been up to lately? I know you're out in Singapore. You know, are you just kind of retired, or do you have any projects that you're excited about, or what have you been up to?
Uh, I have always been an investor because I have to pay my bills. So I'm always on the lookout, the nature of who I am. If I walk down the streets, I try to watch to see if something's happening that might be interesting, that could be a change that would lead to an investment. That's just the nature of my history and my life. Doesn't always work, and I don't always see something, but I hope that I'm always on the lookout in case I see something changing that can lead to an investment. I don't always, and sometimes I make mistakes, but that essentially is, I have never stopped doing that.
Mm-hmm. Is like so investment as opposed to speculation, or do you not differentiate between the two?
No, no, no. I hope I know the difference. I know I'm not a good short-term trader. I don't think I'm a good speculator. So I try to find
Hmm.
things that are cheap where there's positive change. And it's for me, it's better to find a positive change that will perhaps go on for a long time, for years. That's the best kind of change to find. Not that easy, it doesn't happen often, but when it happens, if you are alert, you might have a great success.
Understood. Understood. Well, I don't want to keep you, here for long, but I appreciate you coming on the show. I'm sure the audience does as well. Anything you want to leave the audience with before we sign off?
Well, Jenny, we've had the longest period of American history without a big problem. So I would urge everybody to be worried, be extremely worried, and become knowledgeable, because if you are knowledgeable, you will probably survive whatever happens. If you listen to somebody else and it goes up, you don't know what to do. If it goes down, you don't know what to do. But if you're knowledgeable and you know what you're doing, then you will survive and you will probably be very successful. So please try to educate yourself as much as you can and make investments accordingly. This is not easy, no matter what it looks like.
Any countries or regions do you think that'll get hit harder or less than others?
Most markets around the world are near all-time highs or have been going up for a long time. So usually the ones that have been up the most, and especially the hot stocks in those markets, in the US, we have the Magnificent Seven or whatever they're called, they go up every day. Usually when there's a bear market, those will go down the most. So be very worried about buying the hot stocks. Most markets have been making highs. I mean, China's down. We mentioned Japan before. Uzbekistan I hope Uzbekistan is cheap. I've been buying there, but there are not many stock markets. Property is a bubble in many places. Bonds are certainly a bubble in most of the world. So try to find things that are cheap and do your research. And if you know what you're doing, maybe you'll be successful.
100%. Well, where can people find you, Jim?
Okay, I don't have anything to sell. I mean, I don't have an advisory service I've written a few books. Go buy my books if you want, but I'm sorry, I'm just a simple person trying to survive. I don't have anything to sell. I have a website, but it's just mainly, it's called jimrogers.com or something, but nothing there to buy.
Yeah. Yeah. So, I mean, when you went and traveled the world, for the audience who may not know, you traveled the world on a motorbike. Um, how did you know? What was the reasoning behind that exactly?
Well, I grew up in a very small town. My phone number was 5. That's not a typo. 1, 2, 3, 4, 5 was my phone number. And if you grow up in a place like that, you probably never leave, or you want to see the world. I wanted to see the world all my life, and motorcycles are great fun, extremely a lot of fun. So I had the ambition to see the world and to see the world by motorcycle. I went around the world on a motorcycle once, and it was so much fun that I did it again a few years later, did it by car. I'd done it by motorcycle, so now let's do it again. I went around the world at the turn of the millennium, 1999, 2000, 2001, because nobody had ever been around the world at the turn of the millennium before. So I wanted to see the world and did it.
Yeah. And this was back in the day before like everything became super homogenized and it looks the same. Nowadays you go see a Starbucks, see a McDonald's. It's all very formulaic. But Jim, you did it back in the days when there was still an unknown frontier, so to speak, in some of these countries.
Well, I went through some war zones. I went through some epidemics. Yes, yes. Going around the world is not quite so simple as to drive from St. Louis to Chicago,
Mm-hmm.
but it can be exciting. I mean, if you survive, and fortunately I'm still alive, it can be a lot of fun. It was for me anyway, a lot of fun. That's why I did it twice.
Very cool. Very cool. Well, there you have it. Jim Rogers traveled around the world, invest in what you know, and just no, don't fall for hot stock tips. Don't listen to your barber. Don't listen to your Uber driver. You do the work yourself and get the conviction that you need to, make it a capital that you want. So,
Be careful and be knowledgeable. Yes.
yep. So with that said, you guys be sure to subscribe to the channel if you enjoyed this video. If you want to see more guests like Jim come on the show, be sure to hit a like, comment down below. Let me know what you think. I'll try to respond to every single comment. We can have a little back and forth with you guys and myself. And I will see you in the next video. Bye, y'all.
Thank you. Thank you.